My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today our special guest is Matt Picheny, who is a very accomplished real estate syndicator in the multifamily space. He's also a trainer, he's a coach, and he writes a great newsletter called the Backstage Briefing. Definitely want to check that out. And Matt is zooming in from beautiful, I believe it's Winchester, New
Westchester.
York. Sorry,
Westchester.
Close, but no cigar. Westchester, New York. So Matt, welcome to the show. Great to have you.
Oh, thanks. It's a pleasure to be here.
So Matt, give us a little overview of what you do on the real estate investing side of things. What does the portfolio currently look like? What does it consist of? What kind of properties are in your buy box? What kind of markets, that sort of thing?
Sure. Well, I'm primarily focused on the Sun Belt here in the United States, although I do have a project that I am working on in Ottawa, Canada, a new construction project, but all of the projects that I work on are multifamily. I've got almost 5,000 units that I've been a general partner on. So it's, almost $700 million worth of real estate. Some of those assets we've had managed and moved on from those and exited those, had some nice successful exits. But the majority of the portfolio we still own and operate and manage.
Very good. So as you're a GP, are you a co-GP on a lot of these projects? Or your primary sponsor? Where do you fit in?
I'm a co-GP in all of the projects, and everybody else is co-GPs too. I know there's some people who say that this one's, I'm a GP, I'm a co-GP, I'm a sponsor. On all of the deals that I'm involved in, I have partners, and I take a very active role, and I'm involved in the asset management of all of those projects, and I've been involved from soup to nuts from the beginning to the end.
So what does that actually look like, asset management for you? What's your day-to-day involvement in each one of these projects?
Sure. Well, my background before I got involved in doing real estate full-time was I was a project management professional, a PMI certified project management professional, which means I'm really good and I know how to manage projects, timelines, budgets, and making sure that they're of good quality. And I used to do that in the marketing world here in New York City, working at all these different advertising agencies, working on big projects for companies like Coca-Cola and Verizon and Visa. And I did real estate on the side as a hobby. When I started doing real estate full time about 10 years ago, I made that transition. I took those same skill sets and applied them to managing the real estate projects. So on a weekly basis, what that looks like is I am meeting with our property management companies. So I'm not obviously not at the properties. As you said, I'm based in Westchester, New York, which is just outside of New York City. But most of my properties are we have properties in Atlanta, in Texas, and also in Kansas City. And so I'm not there dealing with the day-to-day. Our property management teams are doing that. But as an asset manager, I'm checking in at least once a week with them and going through KPIs, as a PMP, right? As a project management professional, when I was working in the advertising world, as I worked my way up through the ranks, from managing projects to managing teams, and then eventually becoming head of a department where I had a lot of director level people, I would meet with them on a weekly basis and check in on different KPIs to see how projects were going. And then if there was a problem with one of the projects, I would then jump in and get a little bit deeper and help resolve that issue. And that's what I do at the property level. I'm checking in with all my property managers on a weekly basis, going through our KPIs, taking a look at where occupancy is, where it's trending, even things like trouble tickets, delinquencies, all these different metrics. And if we see something not hitting our goals or trending in the wrong direction, we start to talk about it and address it. And that may mean subsequent conversations after that call, but we're checking in at least on every property at least once a week.
Yeah, that's a lot of work involved with that. That's for sure. So when you guys are looking for new deals, new properties. What are you kind of looking for? Are you in the value add space? Do you want to buy them when they're already kind of optimized? What does that look like? What kind of deals are you looking
Yeah,
at?
I don't know where the real estate market is going, so I always like buying properties where I can force that appreciation through value
Mhm.
add. So that's what every single project I've ever been involved in has had some component of adding value to the property and forcing that appreciation.
So these days, a lot of syndicators have kind of gotten themselves into hot water because they bought in the buying frenzy at the peak of the market. They overpaid for properties, and then interest rates went up 10 or 11 times in short order, and variable rate mortgages are coming due and all that kind of stuff. Has any of that stuff affected you guys?
Sure. I think, a rising interest rate environment has affected everybody. I mean, there
Yeah.
are people who bought properties maybe 5 or 10 years ago who have debt that's coming due now, and interest rates are where they are, right? And
Mhm.
the market has, fallen 20, 30% in most markets, right?
Yeah.
So even if you didn't buy during the frenzy, but you had debt that was coming due because there's pretty much no such thing as fully amortizing debt unless you're doing like a HUD loan, right?
Mhm.
Most people do have debt that expires at a certain point in time, and you're at the whims of the market. Now, hopefully, if you bought something 10 years ago, you've been able to make improvements to that property. Hopefully, things have gone up in terms of income, and you hopefully you've kept expenses reasonable. But we've also seen a huge increase in expenses, things that are beyond people's control. Insurance
Yeah.
prices have gone crazy. Property taxes, depending on the municipality, have gone up substantially. So, I think a few years ago, a rising tide was lifting all ships, and now a lowering tide is kind of lowering all of them. So I think there's a lot of people who are going through distress, and we're feeling it on our portfolio as well. But overall, when I look at the majority of our portfolio, we're in pretty good shape.
Well, that's good. That that
Yeah,
is that is awesome. So you mentioned that you're involved in a project in Ottawa. That's
that's
interesting.
right.
What made you decide to jump over the border? Most Canadians I know are trying to invest in the States, get the hell out of Canada.
Yeah. Well,
What did
okay,
you?
I love Canada. I mean, I'm a proud American and happy to live in the US of A. So nothing against America, but I really love Canada. When I went to college, I went to a musical theater conservatory in New York City, and there was a number of people who were in the program who were Canadian, and I just kind of like hit it off with them for whatever reason, I don't know. And I've always tend to, I don't know why, maybe Canadians are just all nice or something. I don't know. I tend to get along really well with Canadians, and there's one particular person that I've known for a long time that I've gotten to know, and he's based in Ottawa, but almost every single project he does is in the United States. And
Hmm.
we've been talking for a few years now about working on a project together, and he knows that I love Canada. And he found an opportunity in Ottawa. And I was like, "Oh, tell me more about that." And I was like, "That sounds really interesting." And we decided to partner up on that one.
Nice. So what are you doing with that project? Are you doing project management? And if so, what does that? Because it sounds like it's a
Sure.
development, or is it
It's
an
brand new
existing?
construction, yeah. So
Yeah.
we've assembled a few properties, and we're going to be knocking down the existing structures and digging a hole in the ground and pouring a foundation and building a 120 unit mid-rise property. So very
Exciting.
excited about that, and we're really at the finishing touches of getting all the approvals by the city. They've asked us to make some modifications to the drawings and things like that. But that will be hopefully done in another month or two, and then we'll be able to start with demolition.
Oh, that's exciting stuff.
Yeah,
So Matt, I would imagine a big part of the projects that you're involved in involve raising capital, doing syndications, that sort of things.
sure.
What's kind of your take on raising capital these days? What do you find works best for you for connecting with investors? Are you still connecting with individual investors? Are you looking for family offices? What does your capital raise look like?
Well, if we're talking about the differences between sources for capital, I tend to do a little bit more individuals.
Hmm.
than institutions. And interestingly enough, on the project that we were working on in Canada, we had a little bit of hiccup because we had a big family office that was going to come in and take a large portion of the capital. And no fault of anybody's, they had three projects that they were working on that had unforeseen circumstances that came up, and they needed to deploy capital into those three projects to
Ooh,
save them
yeah,
and had to back out of ours, which is fine. We've backfilled for that now, but it delayed our project significantly. And that's what happens when you have a single person writing a single check.
yeah,
So not that I'm against institutional. It also would be nice to have one person write me a $10 million check instead of getting, I don't, 100 people to write me a smaller check. So
yeah.
it's a lot. Um, I think there's a lot of economies of scale doing that, but I tend to have a good roster of investors who've invested with me in the past, who tend to invest with me in other projects, and that's how I tend to raise the capital. In terms of getting new people, new investors into that fold, what I have found works best is not asking people for anything, but by providing people with value. Just
Okay.
like I'm trying to add value in the real estate, in the projects that we have, I try to add value to investors. And I've done that many ways. I mean, I wrote a book called Backstage Guide to Real Estate, very good book that helps people who are interested in investing passively. I mean, yeah, it costs $9.99, but it's not like I make any money off the book, and it's
Yeah.
providing value. But I also have a YouTube channel where I give tons of free education. I do educational things on Facebook every Thursday for free for people who are aspiring to be syndicators, right? I also have a coaching program that's paid, but I provide a lot of free information out there, try to just help people, help make connections, help give information and education. And I have found that by giving, once in a while, when I do have an opportunity and I let people know, hey, we're raising capital for this project or that project, people tend to respond well to it.
Very nice. Now it all kind of fell into place. Why backstage briefing with your background in theater? Now
Yeah.
it's all making sense, man.
Yeah. Backstage Guide to Real Estate is the book.
Yeah.
Yeah, it's all, I'm helping you kind of, it's really more for people who are interested in passively investing,
Yeah.
right? Helping you kind of peer behind the curtain and understand. I wrote the book coming out of a meetup that I used to run in Massachusetts. I'm now back in New York, but while I was in Massachusetts, there was a lot of people who were interested in investing in syndications and would ask me, as someone with experience, what do you think of this deal? What do you think of
Mm,
that? Some deals were great that they would bring me. Other deals, I was like, I don't know why you're investing in that deal. That looks very risky to me. So I decided to put it all down on a piece of paper, or about 250 pieces of paper, so
mhm.
that people could understand what was a good deal and what isn't. Just because someone's promising you, X return versus another person, well, how did they get to that number of that return? What assumptions are they using? They're assuming 20% rent growth every year,
Mm.
where this other deal is assuming 2% rent growth every year. Well, maybe you should go with the one that's assuming only 2% rent growth, because that makes a heck of a lot more sense than 20% year over
Yeah.
year for the next 10 years.
Yeah, absolutely. No, that's
Yeah.
there's a lot of wild claims that go out there and a lot of uneducated investors getting ripped off, basically getting into deals that they shouldn't have. That's for sure. Very
Yeah, so
cool.
just trying to help people kind of understand the mechanics behind them without getting too deep, but just so that they could actually take a look at a deal and kind of, see if it passes
See if it makes
the
sense or not.
test. Yeah.
Oh, that's smart. That's a very smart way to do it. And how have you found that the book has kind of helped your real estate business?
I've never done, I wish I could say, oh, I did this one thing that just like totally
No.
transformed my business, and that it
Yeah.
hasn't. But, I'll talk to somebody and they might want to join. I have what I call my investors club, and that's just anyone who wants to invest in a deal of mine. They meet with me, we put them in the investors club. So I'll say, how did you find out about me? And, maybe they found my book on Amazon, or they saw a social media post and then decided to get my book, or they saw me on YouTube. Like all these different touch points, I think all come together to form a cohesive thing. There was a study that was done by Google, and I'm probably going to massacre the whole thing here, but it was done about a year ago, and it was something about, you have to have 11 touch points across 4 platforms for a total of 6 hours or something to gain trust with a prospective client, like if you're coming in cold. So something along those lines, and don't quote me on the exact numbers
Yeah,
there.
I saw something like that. I'm always
Yeah,
a little
and
suspicious. I'm a little suspicious of the guys that are selling you the advertising, talking about
telling you
how much you
that.
need to advertise on their platforms.
Sure, sure.
But I get it. I get it.
But I think
Yeah.
what the point still stands is that you do need to get in front of people in multiple different ways, I think, for them to start to feel comfortable with you, start to know who you are, and then
Mhm.
maybe eventually, plop down their hard-earned cash in a
You're
deal that
right.
you're
Yeah,
doing.
for sure.
If
Because
they just see a
it's not
social
a little
media
amount of
post.
cash. It's 50, 100 grand or more kind of thing. So it's a chunk of change for people.
Yeah, and I don't know anyone who's going to do that after just seeing a couple of LinkedIn posts that I've done. No matter how clever that post might be, they want to kind of get to know you a little bit and
Yeah.
understand what you're doing and what you're about. One of the things I always tell people is, when they're looking at a deal from a passive perspective, that I talk about in the book, there's 3 things you want to look at: the person, the deal, and the location. And the most important being the person. Who is that person? What are their
Mm.
values? Do those values align with yours? Do you have the
What's
same
their track record, right? That's another
track
one too.
record's
Yeah.
extremely
Yeah.
important. Yeah.
No,
So,
that makes a lot
yeah.
of sense, Matt. Hey, you've got lots of great stuff out there, lots of places people can connect with you. If you could only give people like one place to go
Yeah.
to find out all things Matt Picheny, where would it be?
Picheny.com.
Nice. I
So that's
like
my
that URL.
website, picheny.com. On there, I've got tons of free videos. And like at the bottom, you could go to any of my social medias. You can sign up for the newsletter. Everything is on that website.
Fantastic. Well, hey, Matt, this has been a lot of fun. Thank you for sharing your insights on the show. I thought that was, you know, well, your tips for passive investors are very, very good, but also just the whole way that you go about branding yourself and doing multiple different things at the same time. That makes a ton of sense. And then I appreciate you explaining what your job is as an asset manager and kind of walking us through exactly what that looks like. So thank you very much for being on the show.
Yeah, my pleasure. Thanks for having me.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.